Morning. How's everyone doing? Carl's first. Hungover as shit. That's what happens when you wear a kilt. No mayo around my grilled cheese. That's new. Why did I get banned from the pickle jar? I'm actually not sure. I'll look. Hmm. When Tesla 150. Tesla's pretty far from 150. Tesla's currently at 275. It did close below 275, which is kind of neat. Bipolar bear, stop telling them how it works. Let's see here. 1 hour. Well, I like the breakdown here, but we did find support over the last few days at 273, like 273.50. Let me take a look at what options are doing on it real quick. Nope, that's not. 1 second. All right. Gamma max is 286. Started moving up Thursday. Looks like some call interest fell off on expiration. No, this isn't fucking updated. Never mind. All right, so I don't know what's going on there. Hmm. So if you're looking to go short, maybe like at the money, 7 or 5 to 14 DTE, 5 to 12 DTE, on a confirmation of 40 or 273.50. Yeah, that doesn't seem so bad. 722 is the number of accounts Bipolar Bear has had. Yeah, roughly. He's been banned a few times. He's still here, but he's been banned a lot also. 722 is the number of accounts. East Asian cuisine is greater than European cuisine. Okay. Um, that seems highly subjective. CPI inflation data Wednesday, PPI inflation data Thursday, jobless claims Thursday, consumer sentiment data Friday, Q2 2023 bank earnings begin. A total of 8 Fed speakers this week. Well, thank you for that summation, Squamsk. Yeah, CPI is actually interesting. If we see a 0.1% change in that pretty consistent 0.3% increase, that would increase the year over year or the non-adjusted CPI and would actually give us a higher print. So we're right on the cusp of it. I don't really think energy prices have risen enough. They're up right now. Like oil's at like 73 a barrel, but over the last 2 months they've been down quite a bit. So I really don't know. I mean, maybe durables, consumer confidence has been increasing, so there's a possibility people are out there spending more money. That could drive CPI up, especially as supply chains they're not weakening, but they're kind of contracting, right? Hello, all of my fellow cult members. I'm glad to see you all for our regular cult meeting. Hello, Simo. How are you feeling about Baba right now? It's just kind of an interesting chart. um, I mean, I'm not. It's looks like it's accumulating in like the 78 to 85 range. At least the volume profile supports that, but China's got a lot of issues with their economy. They ousted Ma, right? I would say there's some, well, not some, a lot of risk there. I know that there was like expected fines that were supposed to be going through. And the most recent fine was less than anticipated. I think it was like 985 million. So Atomic brought that up to me the other day. It moved up quite a lot on Friday, 8%. It could run. If it does, I would say like 101. The setup's good. Risky to play overnight, but the setup's good. That's kind of the problem with Baba, though, right? Like, you never want to hold it overnight because the news comes in so quickly and then you get fucked. But you also don't want to, like, chase with no theta or have. You're kind of confined to playing intraday price targets, and that's problematic. Thoughts on Mark making Thread just as fuck you to Elon? I like it. Not enough to buy Meta, but it's awesome. Um, yeah, that's kind of how I feel. I mean, I think it's funny, but yeah, I don't like it enough to buy Meta. I don't think creating a secondary product off of the back of an already failed product is a great business move. But the cost to Meta to create it is probably minimal. And their ability to get users to the platform is automated, right? So they can show like lots and lots of growth there, even though it's irrelevant, because they can just convert all of their Facebook members over to Thread accounts, right? Like, you don't actually have to sign up for it. You already have a Facebook account. Boom. Now you got a Thread account. Scroll past a post, and all of a sudden you're a daily active user. Any data on positioning changing since the calls actually capitulated Friday? Seems like a change in tempo for the pumpers. Yeah, it is. Obviously losing 4050 or 4450 was a big blow, right? They simply didn't have enough steam to get there on Friday. I mean, some tried to close as we approached 4040 or 4440. So a little bit of the positioning fell off, but most of it just died, I think a lot of short positioning came in at 44.50 on Friday, like short calls. So now that's like an upside resistance, but we're still very much above gamma neutral, and we're still above delta neutral, and so any selling is going to be bought into. Um, so that does add stability to downside moves. Uh, I don't think a lot has really changed from last week, except those 44.75s and 44 or 4500 calls are now deeply underwater, and those have started to shed. Um, but I'll go over SPX as kind of its own thing in a bit. Also, VIX, right? VIX started really moving on Friday towards the end of the day. I read an analyst report that said both Apple and QQQ are massively undervalued and should be bought without restriction. Actually, that was something interesting that came up in a report on Friday. QQQ is rebalancing because it's too top heavy, which means all of the indexes that track the NASDAQ 100 and NASDAQ tech and stuff are also going to rebalance. Which probably means a lot of net selling of the overweight securities. Most of the actual index rebalance will probably take place in dark pools, but the ETF bleed could go on for some time, which means the only answer to people who are bullish on that, like the big seven tech companies, is to try to buy more, like a lot more, um, at the top. And the intro Girk did a kickflip with his trading desk and then ripped a phone book in half. It was so cool. Yeah, thanks, Squamsk. I sold to close a few contracts for 40 cents. Then they reached above 1710. It was a silent Friday night for me. I'm sorry to hear that, Kashkari's infinite liquidity. I think Friday was mostly good for people, but that kind of shit happens. Just know that the market will do crazy shit again, and that's all that matters. Have you looked any more at Lulu? I've seen it. I remember someone mentioned it on the stream this week, and you seemed intrigued. Um, I don't. I don't remember being intrigued by it. Oh, it looks kind of bearish. Yeah. But consumer sentiment's been trending up. I don't know if this is a great time to try to short them. Um, they've managed to do very well in the past where other retailers have failed. It's probably a risky short. It's also moderately illiquid for the size of the company. So there's probably a lot of danger in trying to like actively short it. But yeah, I mean, a breakdown here could move down as low as like 328, maybe 300. They do have earnings coming up in September, so quite a ways away from any kind of earnings buzz, helping float the price. It's a good time for downside to happen seasonally for them, I think, as well. Like the chart setup is really pretty bearish, but you probably want to confirm at 350 before moving into a short. Friday wasn't really Charmadillo Jr. Friday was more calls took profits on the way up, which is something we really haven't seen for a very, very long time, right? We generally see them just buy calls and then buy more calls and then buy calls and then buy even more calls until the day's over. And then they, by the end of the day, the like at the money strikes have, 80,000 volume. We didn't see that Friday. Friday, the market ran up, people took profit, and then the market fell like a normal market almost. Um, the thing that's been happening to bears this entire time where, we get a drop and then everybody who made money takes profit and the market rips right back up, except the opposite way. Morning, Celtic. You mentioned you only use 10% of your port to make plays in your account. Well, no, specifically in the small account. But positional allocation is about 10%. I have different allocations for different portfolios. The $5,000 play on Friday was $500 roughly of risk. So the position size was 10% of the total portfolio. It just went up 1,000%. Bought 440 August puts near the peak on Friday. They're in the money. Thoughts on managing well-positioned, longer-dated contracts going into a key date, i.e. CPI this week? I mean, you could sell like an at-the-money put against them. You could roll them down, right? You could take profit and then enter like a smaller out-of-the-money position. But yeah, I mean, if you just want to hold on to them, you can kind of like turn them into a spread to offset any like short-term volatility, and then buy the spread back and allow it to continue to print if you get confirmation of a directional trend. When will they be rebalancing? I think it's already begun. Have you talked about the effect of student loan payments starting up again? Yeah, I mean, we've talked about it a few times over the last couple of weeks. It's obviously going to weigh on consumer sentiment. It's, $18.3 billion a month out of, the general public's hands. So I would expect to see, we're probably going to see consumer confidence drop a bit. We're going to see people spending a little bit less. It might actually ease up pressure on durables. People are really over leveraged. I don't know if every family's prepared for it, like at a really granular level. I'm sure that there will be some, it will cause some, defaults, and there'll probably be some effects there, but I don't know how pronounced they'll be right off the bat. That'd be really, really hard to predict, right? But it's definitely going to be a big blow to consumer sentiment and consumer confidence. Rich people buy Lulu. Yeah, that's true. So a little more insulated, but rich people cut costs also. Based on Friday's price action for SPX, do you believe the needle is slowly becoming unable to continue being threaded? Or is it too early to say? I mean, I would say it's definitely too early to say, but yeah, it does look like it's slipping, right? I mean, over the last few weeks, we've seen the bulls take bigger and bigger hits, right? First they lost the momentum of that big pump um, back here when we formed the island, and yeah, obviously that's really bearish from a technical perspective. Um, and then failure to regain that level again on Friday is even worse. But we saw a similar situation develop on the last pump as well, right? Where they simply just couldn't maintain that pricing. This time we saw them taking on even more risk, selling puts in the money in order to drive the market up and try to get those key levels where sentiment can shift. And once again fail to really get there in a meaningful way, or fail to maintain those levels, which means that buyers aren't coming in to support this, right? And if buyers aren't coming in to support this, you can't simply support it with derivatives. The returns are already diminishing, and even more so the harder you try to push. So I mean, if they're gonna push again, they might really need a big breakdown before that's possible. Provided that the massive amount of tail risk that they've built up over this period doesn't eat them alive. You may only trade with 10% of your port, but some people only trade with 10% of their heart. Fair enough. Student loans are going to be brutal. People already aren't paying their credit cards and other bills. 1 trillion in credit card debt is insane. Yeah, it is. But it can still get worse. I would say that, yeah, most households don't have a very balanced budget right now. Savings have been improving a little bit with the resurgence in the job market over the beginning of this year. Kind of after the big layoffs occurred, we saw through like a lot of March and April and a little bit of May that labor market was starting to get progressively stronger, and then we see that effect in savings increasing. However, the labor market's starting to look weak again. Wage inflation starting to pick up. We had that big spike in unemployment at the end of May, which has retreated a little bit here in June. But non-farm payroll is way the fuck down, right? So the signals are mixed, but it looks like labor is starting to weaken, and if that does in any meaningful way, um, then the cracks in the diminished savings and higher consumer credit will really start to show. The first peak we touched Gamma Max, yeah, back here. I love that you use the island term. Thanks for that. I just wanted to do it so I can make the island bears meme. It really had very little to do with this being an island. I think Graham described it as was it like higgledy piggledy, like just over exuberant buyers, right? Getting crushed by reality. And that's kind of a lot of what this represents. Delinquencies are rising, but they're not super elevated compared to historical levels yet. No, they're not. And but to be fair, increases above like the current standard deviation, right, are generally very rapid. Like it's pretty rare that you get a slow slide into, recessionary economic conditions. Usually it all happens kind of very fast and all at once. That's more of a fault of the way our economy is designed than anything else. But do you have Gamma Neutral for QQQ? I might. Let me look. Some of these aren't updated yet, so I'm not entirely sure, but QQQ probably is. Yes. 369.47. Which is a little bit above where I closed. So QQQ actually closed the day below Gamma Neutral. I do expect reactions to any kind of downside move in QQQ to be stronger than they would be on the S&P, right? Because it's so much more top heavy and less diversified. QQQ is the NASDAQ 100, right? And so the concentration's already very high. S&P is 500 different stocks, and they're much more diversified in their sectors, right? So it tends to be a little more volatile, and it also tends to overperform on both up and downside moves because of that concentration. I thought I played Friday pretty well. No play was anywhere near 10x though. What position did you do that with? So at the beginning of the day, I had 4450 straddle leg call side that was dead from a couple days ago. That I was just kind of sitting on, waiting to get an exit. And I thought, well, we're opening pretty low. We're back near 4,000. If this fucking slips and fails the 4425 test again, I don't want to just lose everything from the upside move. So I started loading up some like bear debit spreads as a hedge for not getting the best exit on those 4450s. And then I got an okay exit. Still took a loss on the 4450s, but the 4450 puts prior had done really well. But I was still holding that hedge when we hit 4440. And so, you know, the call support to the downside had kind of pulled back throughout the day. I was pretty sure that if we hit 4435 and failed, and then very sure that if we failed 4425, we were going to go down. So I thought, all right, well, these are like 20 cents each. I'll start getting some more of them. Worst case scenario, we hit 4425 and I get to exit a little bit closer to break even. We broke down from 4425 and I bought a few more, and then they just printed really hard. So, a little bit of it, the positioning, a little bit of it kind of, I already had the position and it was dying, right? And I was just trying to average out of it, but it worked out really well, needless to say. Some of those spreads I bought didn't just 10x, they like 75x, 75.6x. They were like, when we were at 4425, I think the each debit spread was 10 cents, and they ended up closing at $10. I guess they were like 13 cents. It was still very cheap. Could you go over managing Vega plays on SPX? More so when it's best to roll, in particular September contracts. I mean, you're gonna see price improvement on those on minimal moves and volatility, right? Because your Vega multiplier is already pretty high. I would imagine like 3 or 4. So on sustained drops, remember your Vega also goes up relative to VIX rising, right? Because as those contracts get closer to the money, their Vega increases. So generally you want to see like a substantial move before you roll or sell them. They're generally not there for, trying to scalp small moves in VIX, right? They're still pretty expensive to leverage. I mean, they're not exactly cheap, and so part of the reason you get all of that theta is it gives you a lot of time to realize that bigger move in VIX and volatility. Should your price target for them should probably be like VIX normalizing at like the 16 to 18 range, when VIX is this low, right? If VIX moves higher than that range, then you kind of want to like hang on, or maybe just shed some and keep a few runners and see what happens with it. But I think like the historic range for VIX is between 13 and 18, with it trading around 16 most of the time, which is like an intraday change of 100 bps for SPX. You should look up the rule of 16. US consumers should just default their loans, cancel their health insurance, take all their money out of our banks, and put it into a broker. Most effective, peaceful protest there ever could be. Oh, yeah, absolutely. And don't forget to cut off the 401k deposits. Rich women don't cut costs, they cut men. Fair, but, that creates concentration, right? The high demand men market would shrink in that case. So you're creating a lot of demand on very small supply. That's how you get a squeeze. Thoughts on GME price action for next week? Looking to sell some covered calls. Thanks. Yeah, we could take a look at that. I mean, as we know, they've been getting a little bit more liquidity on GME. That's starting to normalize a bit now. Obviously, the index sell-offs help them a lot. I would say that XRT is still pretty liquid, so if they need to turn to that, they can. GME's borrow rate is extremely low, so obviously just raw shorting of the underlying is on the table. But right now, I think probably continued stable pressure to the downside, and probably stagnant on any market upside moves. We're really not illiquid enough for the upside of the market to have like a highly positive beta right now. And we're not like in the same situation as Upstart. We were a little bit back here, but much less so now, especially after all this liquidity was realized. We've started to see some like in the money short positions build at like 25. Maybe if we slip under like 2250, we'll start to see some more of that build. Shorting is still not as high interest as it was in 2021 or 2022, but there is a little bit more now, and there really hasn't been since after January. This was the last time we really saw any decent shorting come in. This was very weak. So yeah, I would say that there's a good chance we see some downside. Maybe over the next few weeks we hit 20. Obviously there's been some fundamental changes, and I think demand is probably highest at 20. So that's kind of the level I'm focused on right now. But I'm selling like out of the money covered calls and a few at the money. So just diversifying between the two and just letting them roll into expiration. I'm not taking too much theta on them, even though the IV is low and shorter dated ones are a little less beneficial than they have been in the past. Everything's been fine. I've been selling covered calls on it since it spiked. So, and I haven't. The only time I got assigned on any was like back here, and it was only a few. It was like 15 contracts. I haven't gotten it assigned on anything, I don't think, since earnings or like the shareholders meeting. I don't think the rebalance of QQQ is going to be very negative to QQQ. I mean, a little bit, because they're shedding all of those very impactful and highly weighted holdings. So yeah, I mean, it's going to cause some mean reversion in its price. But it's far more detrimental to the Mag 7 because there are so many other ETFs that track the NASDAQ 100, right? And tracks various sectors of the NASDAQ 100, and that bleed is gonna be pretty detrimental to the Mag 7. And then also the Mag 7 are like, you know, they're also gonna have some mean reversion due to the being shed in QQQ. And then I would imagine SPX isn't very far off from being in a similar position. I mean, their rebalance should be fairly neutral, right? But everything kind of surrounding that can push momentum one way or another. So yeah, in a way, they are gonna save themselves from exposure to a steep correction. But as an index, you know, that tracks like the 100 biggest companies, a steep correction would still affect it, right? Even if it is rebalanced, it takes less of a hit from a few individual companies. A sell-off across the entire market would impact it nonetheless, right? It's not gonna stop the Nasdaq from going down in the event of a correction. Was it RC's ultimate goal to shake the shorts off his company? We just don't like the end result. I mean, I don't dislike the end result. I feel like I warned people back in 2021 what would happen if he actually got the shorts off, right? Which was we would stop getting big OPEX runs and all the fun would dry up, right? And all the fun is dried up. So I mean, it's kind of where we are. I really don't think his company's. I think his company's still overvalued compared to the price it's trading at. Um, which is where we've moved, right? We've moved out of that period of broad euphoria to a period of where valuation actually starts to matter, and the valuation for GME now is meh, right? So I would expect at some point we'll find that level. I don't want to be judged by asking you, hence anonymous Ko-Fi, but do you think there's potential for a volatile move on AMC soon? Isn't the bar, I mean, you know, the prime borrow rate's like 5% on AMC, right? Below VN, 947% borrow rate, big recent FTDs, reg show. They also have the ape conversion dilution coming through, right? So what it sounds like is everybody's shorting a bunch of liquidity coming in, right? Like everyone's going short as fuck knowing that they're going to get bailed out by the liquidity coming in from the ApeCoin conversion. if Adam Aaron really wanted to fuck shorts, now would be the time to do it, but he's shown no proclivity to that in the past. They got sued. Did the court stop the dilution? Just because they got sued doesn't mean anything. SHA is the Ko-Fi. Who pays for an AMC question? We're not judging, right? It's just a stock. We're gonna put our biases in the back seat and look at it logically. And yes, there's probably a play there, but it's extremely risky. I mean, AMC is greater than PPPYRQ. That's one's going out of business, one's out of business. Here's the deal. If there's any interruption in liquidity from the conversion of ApeCoin, then yes, that would present a problem for people who have gone excessively short. Maybe a big problem, maybe not. And this is kind of where the biggest issue lies, is that, you know, AMC is still very, very fucking liquid. And it doesn't take much of a pump on it for the shorts to reposition or get out. Which is why you see such a high concentration into the short position, because they're very confident that the risk is low. Toe Ring Caveman and the Mushroom Boy coming out to play today? Maybe. We would like to let you know about our 1% down subprime loans. You can get into the home of your dreams today. Equal housing lender. Thank you so much, Rocket Mortgage. Well played. Nothing like predatory loans to the lowest brackets of society. Last week, you and JFresh mentioned VIX was a bad vector to go long on vol. Can you expand on that? The options are wildly mispriced. I don't think much expansion beyond that is necessary. Calls are way too expensive. There's a million other ways to go long vol without going long VIX. So why bother? I think for a little bit there, in the money puts we're trading at like 0.2 delta. Greek has made a genuine effort and well-reasoned explanation to someone that is asked about AMC. This is the final seal broken, and market-wide Armageddon can begin. I was trying to be fair. I mean, I still think he's an idiot for even looking at fucking AMC, but I was trying to be fair. How is VIX so skewed? It's like MMs know something. I mean, VIX was at like fucking under 13 like just a couple weeks ago, right? I mean, all the historic evidence available would point to, yeah, obviously the MMs knew something, right? It was like almost below historic vol. Like it was fucking ridiculous. Valuation is important on GME, but the DRS shares seem to be creating a floor. No, that's not what they do. They actually don't do anything to the price. They don't create a floor unless people are buying more shares at the current price and DRSing them. And that's because they create bids, right? How soon before they get the ability to short the options contracts themselves? Since the lack of float is irrelevant, as shown by ETF shorting and FTDs. What do you mean? They can short options contracts. People are holding, but that doesn't matter. Holding doesn't support price levels. How do you not know this after all this time? Look how many people held Bobby. That didn't keep it at $3. What the fuck? No, it doesn't help. It doesn't do anything. It has no effect on price realization whatsoever. That's not how pricing in the market is determined. No one's checking to see how much people are holding. If anything, it creates more price volatility. That means that the price can not only go up faster, but drop faster as well. Shill. Yeah, I know. Can we not do the whole DRS thing again? Can you talk about curve inversion and the 10-year? The 10 and 30 have been tickling each other's taints recently, and that's very bearish and could be a signal of an incoming credit collapse. And I'll explain this in the easiest way I can to people. If you're a bank and you've got bipolar bear sitting here with this 401k who wants to buy a house at 200% above its actual value with no inspection, or for 7% interest over 30 years, or you can take 30 years against the US government risk-free at 4% interest. Which one are you going to take? Shut up, I don't care about your current fucking mortgage. You got any spicy equities and pickles picks? Usually, yeah. I mean, what, like long-term stuff? I haven't been super focused on long-term over the last couple months because, I mean, I picked up Schwab a little bit, but aside from like the Schwab pick, which now I kind of want to sell because it's done so well. But besides the Schwab pick, yeah, I haven't been really super focused on like value picks because treasuries are insane. Like, do you just look at the treasuries? Or you don't need to buy companies when those are there. I'm not gonna buy some piece of shit company that's got risk and possible scaling issues over the next 5 years and growth moderation due to tighter credit conditions when I can just get the fucking 2 year at 5%, 5.2%. Like, why bother with companies? Bonds are dope. Not AAA bonds. Those yields suck. But Like short-term plays and stuff, yeah. I mean, I had a few this week, if you paid attention to the updates. Also, guys, turn on the fucking notifications for the Pickles Picks channel. I don't care if you block the pigeon whales. They'll find you. But turn on the notifications for the Pickles Picks channel, because that way, if I post them, or like perfect predictions of the next day's market price action, like on Friday, you know, you're aware of them in advance, and you can use that analysis to possibly further your own goals. If you don't read it, it's kind of fucking useless. Trick question. I chose Somalian bonds for 11,100% over 3 years. Okay, that's actually awesome. So you're really playing the like long IMF play, right? Like the US is going to bail them out. So okay, all right. I like where your head's at. You're on a list now, but I like where your head's at. How do you feel about SRF here? It looks like it may be bouncing on a trend. Yeah, I mean, if you're in it for the long haul, right, then buy it when it's trading below NAV. The further below NAV, the nicer the buy. If you were in it for like the short-term play from 2 or 3 months ago that was for 3 or 4 months, then you should have taken profits when it ran, right? Energy is getting a little bit more demand, and broad commodities are starting to show a nice trend of accumulation here. Very nice trend of accumulation. People are getting a little scared, and I like it. Thanks for your AMC answer. I didn't have and have never had a position. I was just curious about your thoughts. The pickle audience was real mean, and I cried a little. Okay, you know, you first of all, you didn't have to send me money to whatever. Thank you, silly stock person. You'll get over it. Traders generally aren't very nice people anyway. Because some yields are insane and make me worry about who the fuck is going to be financing that shit. Why buy bonds when you can sell CSPs on GME? True. But you can't, I mean, that's a scaling issue, right? If you don't have a lot of money, then sure, that's fine. But if you do have a lot of money, then obviously that's too much risk concentration. The counterparty risk at these rates is dummy thick. It is. You're correct, Dork. Are you gonna hop on here? Please unban Hazy. I need him to dub a Liam Neeson video from saying the pigeon whales will find the pores. Hazy knows how to unban himself. It's not my problem. I just reduced my ETF exposure to 10% of port. I'm assuming one part of this market downturn will be ETFs exploding. That would be cool. I would like to see that personally, as someone who's been tracking ETF risk for going on 3 years now. I would very much like to see all the ETFs explode and die in a spectacular way. Although that happening would be kind of the inverse of what I hope to make on a market crash, which is money. Girk, why is Comerica issuing 1-year 9.3% bonds? Because they're going to go bankrupt if they don't. You want me to? I'm down. Yeah, you could hop on. Did you talk about SPX? Did I miss it? very briefly. I was gonna more talk about SPX with I don't know what JFresh is doing. Tag JFresh in the quant cord dork and see if he's up to nerd around. Selling for, not issuing. Ooh. Well, then other people just think they're gonna go bankrupt. Over short. Each Pickles pick is a separate thread. You have to join the thread and then turn on notifications. Okay, so do that. I have an offer for 5.2% APR, hold to maturity for 8 months. Does that mean I need to math that out, or is that really 5.2%? And no, I didn't call them. The 5.2% APR that's annualized. So if it's for 8 months, then it's not 5.2% total, but it's like 75% of that. Yeah, 75%. I do that already. Well, I know because you said how to do it, so I assumed that you did, but I meant it was more of a broader statement for everybody. Here's my question is if Nasdaq starts selling off the Mag 7 and ETFs start bleeding it out, and all the boomers that are selling out of the money covered calls on it start to get buried underwater, what's going to happen? Hmm. Hey, Dork.
What's up?
Hold on. There we go. Say something.
What's up?
All right, there we go. How you doing, man?
Doing pretty dang good. Just having a nice weekend. It's a beautiful day outside, so walked around a bit. Just the usual stuff.
It's cloudy here.
Ooh,
Yeah.
that's kind
I was gonna go up to the roof pool again and send JFresh pictures of my toes, but
of.
now it's
Dude.
depressing and I don't want to.
Yeah, and all you just made all the pigeon whales so jealous.
I know.
So we bearish?
When haven't I been?
That's true.
I mean, yeah, I continue to be pretty bearish on all of this. Obviously, real being bearish on the macro environment and realization of that in indexes are two very separate things. But yeah, I think the longs lost a lot of ground this last week. I think some positions got buried, and maybe some faith in attaining those higher levels on SPX might be pulling back a bit, and we might be headed towards a little bit of a correction here. Obviously, below delta neutral, that becomes a bigger correction, right? But we have time. We're not there yet.
Yeah. Um, it did feel like on Friday, especially like the failure on the gap fill.
Mm-hmm.
Just I felt a little safer being a bear once that really failed and dropped back down to the opening level, I was
Yeah.
like, ooh, yeah, that was a refreshing change of pace from what usually happens when the market moves up. 7 days usually stays there, but now it's
I
gone.
think there was a period on Friday where we were like over the last 3 months where we were much closer to hitting 4475 than we were to hitting 4400. But then those calls started to close, right? And that changed everything. I think if we'd closed Friday above 4425, I'd have a lot different outlook on this week. But the fact that we didn't, the fact that that positioning just gave up, the fact that we closed below the short puts, I mean, makes Monday kind of interesting, especially with
Yeah,
CPI coming up so early in the week.
yeah, I think that smart money might be realizing now that we aren't at the end of the stress on the financial system. And I think that's really kind of why 44.75, became unattainable, was because there was a realization after there's a crazy strong upwardly revised jobs report, I believe it was.
Yep.
Uh, and with that, that gives the Fed all the room in the world to keep hiking rates, right?
Mm-hmm.
So, if the broader economy is still strong, like while the financial system is undergoing more and more stress, right? Because conditions can't tighten enough, apparently. The Fed's going to keep until the financial system breaks, and I don't know if the rest of the economy will follow, but it just seems like it's becoming a more real risk. Smart money probably slowed down on their exuberance a bit because they didn't put their pants down.
Yeah.
What's up, Jay Fresh?
What's going on, guys?
Hey, what's up, man? Are you packing for a trip?
Yeah,
Where are you going?
Chicago, your
Oh,
favorite city.
oh, yeah, gross. Are you gonna hang out with
I
Carl?
said hi.
I could. I don't know. He lives in. I don't want to dox him, but he doesn't
You
live in Chicago.
you want to hang
Oh
out?
yeah, he lives
Are
in
you hanging
Florida
out
now.
with Carl's wife?
Oh, of course.
Oh, okay,
Yeah.
all right. That's all that matters.
You guys, doom and gloom, same shit.
No, no, I'm not. I'm not that gloomy. I'm a little more euphoric on my doom today, actually.
Yeah, I'm feeling optimistic, I would say, more so than like optimistic in where
Okay,
things are now. I think
but
that I think
I want to make sure I understand. You're optimistic about negative outcomes, right?
mostly about a pullback. Uh, we're kind of in some sort of middle space. There's not a lot of stuff happening. Like I'm not necessarily sure. I'm like I think the market's going to explode next month, but in terms of a pullback, I think we're probably in one just based on the weakness of the position.
All right.
You're breaking up a little, dork. Just
Oh, am
Okay,
I?
that's him, not me. I thought it was me.
no, it's him a little, just a little bit, like in the upper range. It's kind of cutting out.
Let's see if I can fix that.
Bro, hit me up. See, there you go.
Yeah, we'll see. I don't know. I kind of with my family. I just say yes and follow.
Mm. Yeah, I mean, I really wish we could. Well, actually, we kind of can. We do have a little bit of a better picture of gamma exposure, but I think I want to reiterate something that I kind of talked about on the Discord on here for a slightly broader audience. It is that that spike in VIX that happened the other day, before we kind of found some support and recovered a bit, and then the subsequent immediate all day short of VIX, seemed to me like we were seeing gamma builds on the opposite end of the spectrum. So I don't think that that VIX short was due to short put selling, because I went through almost every expiration and found very little evidence of increased put selling anywhere. But I do think it was a significant increase in short calls.
I actually would agree with you there.
Yeah.
And especially, when we did have some periods throughout the intraday on a few days, especially at the end of the week, where VIX and SPX started moving together.
Yeah.
And that kind of indicates that it's the call side that's sort of driving the VIX.
And so
Like that's kind of what happened in December.
I'm wondering if this is and some of the gamma stuff kind of looks like, even though it's making that, like long calls, short puts assumption, I'm wondering if some of the gamma data is actually indicating that dealers are preparing for large net short positions that are coming in, and long vol, right? I think long vol is picking up in a pretty substantial way, which means that there's some agreement there that downside's coming.
Well, what's interesting too is that, we talked before, I think it was last week, where we said that the VIX options were a terrible instrument to get exposure to vol at the moment because it's so manipulated. It does tend to go in cycles, and it does look like the put side is starting to become sell heavy, or more sell heavy than normal. So if you look at the bullish gamma, bullish delta data on the VIX, you'll see that the puts are starting to rise up off of -1, which would be all bought.
Yeah.
So there's some put selling going on the VIX, which is interesting.
That's
Usually, and I would have
fucking risky with that much skew, right?
I mean, they're super cheap.
Like, what are you selling, like 20 puts to one call?
I don't know. They're super cheap, so I don't know why people do it. I think what it also could be indicating is just that the demand for puts on the VIX is going down, which is consistent with what you're saying. But it was really interesting in that after they got volatility under control, I would have expected that to go back down, kind of get crushed, but it didn't. It's still sort of trending upwards.
Yeah. That's why I think the crush was short call sided and not short put sided. And if long vol leveraged funds are moving towards long vol, right, then that indicates that at least some confidence on their part that there's going to be a significant change in the short vol positioning.
Well, yeah, that's what I was trying to say. I think I also said this last week. If you look at the term structure for VIX futures,
yeah,
everybody's pricing up VIX futures. They're saying that volatility is likely going to be in the 20s by the end of the year, right?
Yeah.
But they're saying right now nothing's going to happen, so we're going to short the VIX now. But we anticipate at some point in the future something will blow up, but not today.
That's kind of like exactly how Volmageddon happened.
Right. Well, that's, essentially, you think about it, there is a rolling short VIX position, or, short vol position, that's always just saying, well, it's not going to be today. And if every day you say it's not going to be today, eventually it's going to be the day. And so it's inevitable that it will blow up. It's just a question of when. And I think maybe, a lot of funds have been going short vol and they've sort of saturated, right? I don't think it's I don't think anybody would be, questioning that it's a crowded trade at this point. And so maybe they're, now that the first half is over, they're reassessing their longer term strategies, and maybe they're going, removing some of their vol exposure, their short vol exposure, and looking for other ways to gain income. Obviously this is all hearsay based on the data we can see.
Here's some more supporting evidence for that. And it is from the technical side, so I know you'll hate it. Prior to large moves in volatility usually spikes to some degree, and then it's, as market participants prepare for that spike in volatility, it usually gets kind of slammed back down, right? And this is something that like I noticed off of like where I think we saw short call positioning start to come in and short the VIX, which was here when VIX opened up at like 17 the other day. And if you look historically, this happens almost on almost every large move in volatility, as it's preceded by this like little spike where short vol gets scared out and repositions. And sometimes it's more extreme, sometimes it's less extreme, but it happens very consistently. It's usually when it spikes above its like local average. Like you can see it back here. Where's some this? Hold on, this is too short of a time frame, really. Let's go out here. So you can see it on a broader scale here. Like you see these spikes that occur, and then they get shorted back down, and then vol really explodes once everyone repositions, right? And this like latest event, right, where VIX moved from 13 basically overnight to 17 is very much in line with those prior events of volatility spiking in the past.
Yeah, it'll be interesting to try to find a mechanical basis or reasoning for why that technical analysis observation occurs, right? And it could be that sold puts start to come off, and so sold calls start to jump on.
Yep.
And that could be that bump we're talking about that gets suppressed.
Well, if people are going long puts, then dealers are going short calls, right?
Dealers?
Well, yeah.
I think people holding longs are selling covered calls and trying to scavenge on the way down, right? There's more. I mean, if you look at the skew on the IV, there's more meat on the call side, right?
Yeah.
So if I was trying to scavenge, short vol, the meat's starting to show up on the call side. But we'll see. I was actually about to do a wellness check to see if Dork is still alive.
Yeah, I've just been sitting here listening to you guys. I hope I sound better now. I switched up my audio devices to try to
you
make
do
it a little more reliable.
You sound a lot better, yeah.
Awesome. Cool. Yeah, I mean, everything you guys are talking about makes total sense. Like, I think that, yeah, it's like if the call side really does lose momentum, like the long call side, then I think that, smart money, if anything, is going to be looking to just take what they can from their long positions, and if nothing's happening, like I said, like a pullback is probably likely, but we might not see actual just straight up selling of equities. Rather, we would probably see a lot of vol shorting to the upside.
I mean, I think the only equities anybody owns at this point is just the Magnificent Seven.
Yeah, I mean, yeah,
right?
in terms of really large funds, you're not far off.
I mean, in terms of everyone. It's a third of the S&P, so if your indexes, you're mostly those, right?
Yeah.
It's over half of the NASDAQ, which is why the NASDAQ's doing their special rebalance. Because it's in their prospectus. I think there's like if the top 10 if all of the stocks that are over like 4.5% weight add up to more than like 40 points.
Was that it?
There's something on the order of like 80 billion.
Well, you cut out for like 20 seconds, Jay Fresh. Recap.
Shoot. Yeah, I was just saying the NASDAQ rebalance is probably something on the order of 80 billion. Current Mag 7's like 12 trillion. So, I don't know if it's a nothing burger, but it's not going to be like some monumental.
Well, it's more than just the index rebalance, right? There's a continuing effect of that through ETFs.
Oh, sure, yeah. If you could put negative pressure on the ETFs, that'll be fun. But
That's really I think that's gonna be the biggest thing that happens is the portfolio rebalancing. I mean, it's not just it's ETFs, but it's also, portfolio
Mutual
managers
funds,
yeah,
index tracking mutual funds,
yeah.
systematic funds are gonna sell
Yeah,
probably just the entirety of their position until it looks good again.
I mean, if I enjoyed like 50% gains on Apple and 100% on all these others in a few months, like you'd have to be a moron not to sell here.
Yeah.
I mean, yeah.
And I think like short call interest, especially on things like Nvidia and Tesla, is already really, really high at the money. And they're kind of like locked into those with like 30, 45 days to expiration, right? Because they think they're all like resting at their top, right? But if they start to fail, those short calls are going to get pulled back so people can sell before they realize a loss, right? And that can just accelerate the downside even more.
Yeah, like
Yeah.
if you look at the volume distribution on price for like a SPY or QQQ, right? We're still in a nice profitable area where you can feel safe as a long, especially if you have been DCAing nonstop the entire time. But if we do drop below these levels where the highest volume is concentrated, that it sort of suggests that there's a constituency out there that is feeling on average a little nervous.
I mean, of course they're nervous. The fucking stock's up like some of their stocks are up like 130% this year. I'd be nervous
Yeah.
too. Yeah,
Yeah,
I think bulls are they're gonna show themselves to be a lot more flighty than bears have been.
Yeah, I think so. I mean,
I don't think anyone's sitting there under the. I mean, some real idiots, but like aside from Tom Lee, I don't see I don't see anybody else sitting on their long positions that are up 130% and going, no, this is just the bottom.
yeah, yeah, it'll be interesting to see. I mean, you're kind of in a position where the people who own it have to continue owning it, right? And then the people who don't own it, have a lot of pressure from clients and things of being like, why don't you own this? It's going up. And so I think everybody actually just kind of wants it to go down.
Yeah, I mean, I would say that the last week on SPX really showed us that, right? There's just no buyers up here. And then Friday we failed to find buyers yet again. Even at a slightly lower level. Yeah, that was very fun.
You could see like it was beautiful, right? I mean, you could see that the calls were selling, and then on the way down, it was just hitting all the strikes.
It was the most. Honestly, it was the most normal day of market movement I've seen since March.
Yeah.
It was just the way it should be going, right? Like, calls should take profits when they're, 50 BPS in the money, and then, short positions should build, and that should create, a reversion to mean. And we actually got that on Friday, and it felt real good for the market to move in a normal way instead of just seeing rampant call buying every second into close.
Yeah, it was a reasonable day. There was actually a pullback from the exuberant pump, right? Like usually, yeah, it's like the exuberant pump happens and people start taking profits on their in the money shit. But then a bunch of like at the money calls just flood in and just stabilize the price. Whereas this time around, we saw the in the money calls take profits, but we didn't see the stabilization we normally have been seeing these past couple months, and that was yeah, like I said, it was refreshing to see. Right, it was nice.
It also and at 44.25 when we slipped there, it started to show some actual fear in the bullish positioning, which is maybe even better for this coming week, especially for people that are net short.
Here's my question. Is my short put butterfly screwed?
If we don't fall below 43.60, right, by
43.80.
43.80
But
by
it's really more like 43.80. Oh, 43 like 83.
so yeah, if we don't
Tuesday.
fall below 43.83 by Tuesday,
Or above
yes.
44.14.
Yeah, you might be fucked on the bull side of it. You
Oh, I
you
don't
can
care.
collapse it, right? And like
No,
the
I'll have to
sold
ask you
calls,
later.
so you can sell the opposing call, like you can sell the opposing call butterfly. So you would sell two 4,000 calls and buy a 43.80 call, 44.20 call, and it reduces your total like positional risk to like $5.
Yeah, but that's if you do it both at the same time. You just basically net nothing, right?
Yeah, but nothing's
But
better
I'm
than a
already
loss.
down.
Hmm.
Yeah.
That locks in
was-
your loss. I don't
Yeah.
I don't know how you didn't have a chance to get out on Friday, but I mean
It was the spreads. I was trying to get out, but it would have
like the in the money spread just fucked you. The
yeah.
liquidity got really dry towards the top, and that's why I started to get really confident in the like bearish positioning, because I had 4,000 calls from the prior night straddle, and I had 44.50 calls. I had no problem selling the 44.50s at 44.40, but the 4,000s I could not move. Nobody was buying them. It took the entire flat top, like that 1 hour period, for me to sell 25 4,400 calls in the money, and I almost had to sell them. I almost had to sell them at the bid. It was
Yeah, I
ridiculous.
don't know. It seems really unlikely to me that we won't see a 20-point move between now and Tuesday.
I mean, VIX is at like 1580. Probably be higher in the morning. I think there's a pretty good chance that we see Gamma Neutral over the next few days.
Yeah, I think I'll be all right.
Yeah,
I'll figure it out. I got time. I don't need
and
to be worried till
like
tomorrow.
our like adjusted GN is at like 44.10, right? And we're below that now.
Oh, I haven't been looking at the adjusted ones.
Yeah,
That's good.
so we're below that, and we're very close to like below the adjusted DN, and so yeah, I think a move to Gamma Neutral is probably really likely, unless we get too much like neutral positioning for CPI. I think we could see it maybe tomorrow even.
Yeah.
And then we see neutral positioning come in and buoy it into Tuesday. And then CPI probably will lead to another pump if we don't get 0.4 month over month. But
Yeah, I think it'll pump.
oh, also, can you update the, like, a bunch of the tickers aren't updating with everything else.
Really?
Yeah, like Tesla's like 2 days behind.
This might be a Mork issue.
Oh,
I can take a look. But I'm gonna blame Mork.
Okay.
Because if the majority of them are updated, it's a caching issue. If only a few of them are, then something got screwed up. But I think it all ran fine.
Okay. Well, I'll see if he's around and if I can bug him. I know he's been busy with work.
Airing our dirty quant laundry on live stream. How dare you?
Speaking of which, toe rings.
Shit! No,
have you
it's
had
my fault. Hold on, it's my fault. I'll fix it right now.
Oh, is it because you're just updating like just SPX so you can see if your spreads are gonna live another day?
Yeah.
Oh, okay.
Sometimes I push a couple tickers, and I forget to change the code back to do all of them. So I think what it did is it just uploaded only 12 of them. So let me.
Well, that's awesome. Cool. That'll help tonight.
I'm glad you caught me before I got on the road.
Yeah, that's why I wanted to bring it up on, even though we had to do it here in front of everyone.
Well, we're human.
Yeah. Speaking of which, custom toe rings. Do you have any metal allergies that I need to be aware of?
I have lots of metal allergies
Ah,
that you need
fuck.
to be aware of.
Okay, so 24 karat gold or platinum, or is the only option?
If you're buying, yes.
Okay. And if you were buying, I'm assuming surgical stainless steel.
Yeah, or silicone.
Oh, okay. Ooh, I like that.
Yeah,
And what's your toe ring size?
I have no idea.
Oh,
This would be my
if
first
you
toe
can,
ring.
if you can measure, that'd be great.
Okay, I'll
Just
get
go
right
to
on
go
that.
to a jeweler. They'll hook you up. What about you, Dork?
What, my toe ring size?
Yeah.
My toes are pretty fucked up, so I'll have to.
Well, pick another toe.
Pick a less fucked up toe, Dork.
I don't know. I've never measured a toe ring size. About the size of like a Sharpie.
I wish you guys had an immediate answer.
No, you need millimeters.
Geez. Well, that's not the only thing I need millimeters with. So.
I think it's millimeters, right? Isn't that what the number is, or is it in like deci inches or something
I have
stupid
no
like
idea.
that?
It's probably.
Use
probably
a caliper.
dumb.
I have a
Gallium?
caliper I can use.
Oh yeah, use a caliper. You just need the diameter of the toe.
Wait, who suggested gallium?
Mass spectrometer.
For what?
That's the dumbest thing I've ever heard. It melts at like 30 degrees C.
Oh yeah. Gallium's it'd be liquid on you.
He's just trying to mess with us.
We do like liquidity. If Mag 7 is holding up the market, what happens when earnings come up short or worse? Oh, everything dies. A horrible, horrible death.
Yeah.
Yeah.
I don't know. I mean, they're running out of games to play, but I mean, here's the thing I'm expecting.
Does a $2 trillion company ever run out of games to play?
I expect revenues to be up, but earnings to be down.
So
because we're just kind of getting
another
into that
quarter of
point where
indecisiveness. This could totally be with more in the future, but maybe not.
With strong demand, right, and inflation, revenue is just going to rise, right, with the risk-free rate. There's going to be that kind of buoying effect. But their margins are going to continue to collapse, right, as wages continue to be sticky. So I expect revenues up, earnings down. And then, everybody's been moderating down their expectations for earnings. So we could have another obnoxious, terrible beats season.
Ugh.
Like this hell could go on.
I mean, at least on the Mag 7 front, we're a bit safer from them moderating down earnings across the board because they've already declared that, their earnings would be higher this coming quarter. So, I mean,
yeah,
you're not going to see too many analysts drop their expectations below the company's own. But yeah, we a big miss in tech would be a huge hit to the market right now.
Yeah,
any big misses. If it's Microsoft, Apple, or Nvidia, those would be.
I'm a little concerned about Nvidia with the buzz around Oracle and whoever owns TikTok, a couple other people. I think there's a chance that I don't know that they'll hit their ridiculous 12 billion number, which I think was just for, was that 12 billion total, or was that just 12 billion for the?
It was 12 billion for the quarter. It was 8 and then 12 is the earnings projection. So they hit 8 last quarter. But
that's for all of their sectors. Okay.
Yeah.
They might be able to. I don't know. They might be able to do that. Or, 10 or 11 might happen.
Well, then Nvidia, we just buy calls at earnings, and Nvidia goes to 500, and we make 18x again.
Yeah.
Right.
I still am not ready to say that this is the top for Nvidia. Do I think that that's sustainable? No. You can already kind of see the AI buzz dying, but the orders have already been placed and the bets have already been made, right? I mean,
have they though?
For a lot of the big boys.
I think a lot of those deals are still tentative. I could see those getting pulled back.
I think at mid and small cap, like all the CEOs and C-suites are all still just sort of like, jacking themselves off to the idea of, integrating AI into their business somehow. They don't know how, but the idea makes them excited. And maybe they'd want to, maybe they're like, oh, we're going to be AI forward, so we're going to buy one of their stupid little modules that costs $200,000 and stick it in our IT room.
Yeah.
Um,
Everyone's trying to
yeah,
figure
so
out how to sell their bags at the top.
So yeah, I think I think that the general consumer is already sort of like losing interest in at least like ChatGPT and the whole chatbot thing.
Yeah.
They're still interested in it and they still all believe it'll be the future somehow, but they're not like obsessed with it like they were a couple months ago. And I think that will have a moderating effect somewhat, but I think there's still enough buzz and enough money ready to go that it's hard to say what's going to happen. It will go down eventually. It is a it is a fundamentally flawed promise, but we might have another quarter of this or two.
Ugh. Well, I'm ready for it one way or another. I've got theta and selling calls on the video is just so glamorous. So
That's ridiculous. I sold 455s for next Friday for 10 to 15%. It's like $20. It was like $25 out of the money. It's insane.
I sold 425.30 and 430.35 last week, and I had to close the 25s. But even with the loss there and my cost to carry theta, I'm like up 8% on Nvidia for the week. So as long as I'm harvesting positive returns on my net short position, I'm happy. The fucking call skew is just so ridiculous.
I think my Nvidia, because I'm pretty much all down to just long-term debit spreads on Nvidia. I think my total position's down like $400, and I've already made like $600 selling covered calls. So
nice.
I'll just wait, and they're for December.
Okay, yeah, so you got plenty of time.
Yeah.
Yeah, I've been mostly September, but now leaning more into Jan, just in case earnings gets ready to fuck me again, and then I'm gonna strangle earnings hard.
Yeah, I'm definitely not going in without some long side.
Yeah.
On earnings.
I figure I'll like at the money, depending on how much IV pumps, but like at the money inverse butterflies and then use that to fund out of the money strangles.
Yeah, could work. I'm still dipping my toes into inverse butterflies, so I don't know how I feel about them yet.
They're I'll tell you on Tuesday. Really awesome when they work properly. When there's a big move, they're great.
Yeah. Well, we'll see. I don't even need that big of a move.
Do you know much about FNGS? Is this the finger thing again?
That's the finger thing, yeah.
Yeah.
What is this?
What the fuck is pumping this? Is this like a Twitter thing? Why do I have to keep hearing about it?
What is this? A finger? What?
Yeah, it's some company that's called Fingers or something.
It's FNGR, and it's this one.
Ew.
It's just like up a bunch, and everyone wants to buy it because it's up.
What does it do?
They're a packaged software provider.
Oh God.
Yeah.
Kill me. Why would anybody buy software from a company called Finger?
They're called Finger Motion.
Not much better.
So it's actually worse.
We get all of our IT service software from Finger Bang.
We should open up a competitor called Finger Bang.
Toe Bang.
I don't know. It doesn't seem that different from like C3 AI, like bullshit company that does fake things, pretending to do things.
What about Shocker Enterprises?
pump their share price. Their float's 23 million shares. If you don't think they're going to dilute into a sufficient pump, you're out of your mind. This is the same story with all of these companies, right? All of these like shit penny stock companies. If they pump hard enough and they don't dilute, they're not a real company. Right? If they're a real company and they pump really hard and they want to fund future growth, they're going to dilute, right? So the dilution or insider sells are inevitable at the top. It's a Houston Wade stock. Why is that fucking guy still picking stocks after the MMAT fiasco? He's a geologist, right? Or full-time waiter.
Why are people still paying J-Roll $150 a month after he lost 16 grand on GME calls like a week ago? He's literally
the only thing I'm angry about with that is that I could have been charging $150 a month this whole time
to tell people it's a short over 26 or 27.
Yeah. Ooh, so that means I inversed J-Roll and beat him, and I didn't even know it. Imagine giving that fucking like actual fake asshole any money. Whatever.
A lot of people do.
Yeah, apparently.
I want some money.
He's like actually like a fraud hack.
I want free money. I need to try harder to get free money. People have too much money.
Yeah, exactly. That's why we trade in the markets. It's the easiest way to receive some of all the free money out there.
That's true. Yeah, as long as I don't blow up, my returns are looking good right now, like 25%.
Yeah, you're killing it. You're doing good. I made note on the Discord that you went, from full porting calls to full porting covered calls to now full porting spreads. And
mostly 1 hour to expiry at the money. Yes.
Yeah.
Can't go tits up.
Couldn't possibly.
Can't go tits up, bro.
No, I've actually been scaling that down. Like on Friday, it would have been super profitable, but I had some, but I was much more conservative on that because I'm tired of sweating for 2 hours of the day and just like screaming and wanting to punch my computer. It's not healthy.
Yeah, that's the problem with shorting vol. It's fun. Until
I've done it 6 times and I nailed it 5.
1 second, I got someone here.
And the blow up one time, I'm still net positive by a significant amount.
That's cool.
But yeah, it's super dangerous. Don't do it. Right, don't do drugs, kids. Like me. We learned it from you, Dad.
Yeah. I think that I don't know. I'm still in the camp of just keeping my cash hidden away because I don't want to risk it in this kind of market. I especially with the gains I made earlier in the year, I was like, I lost a bunch of it on one long vol play, and I was like, okay, I'm out with this cash. I'm not touching it.
Yeah, no, I mean it's smart. Hold cash. Hold it in like a fairly liquid insurance-bearing instrument, like a money market fund or short bond.
Just a money market, yeah. And I'm just gonna. Basically, I promised myself all I would do with it is like buy SPY or something.
Yeah, you don't even really have to time the bottom. You just have to wait until it goes down a lot.
Yeah, exactly. That's pretty much what I'm doing. Is if we get like a real pullback, I'm just gonna start DCAing.
Yeah, no, I mean that's basically exactly what I'm gonna do.
Yeah, it's all right.
Yeah, you gotta have some fun.
Yeah, I still have like I think I have like $800 just still in my account at this point that I'm using. I'm just like I'll play with my funny money some more, and if I can grow it again at that same rate, then awesome. But if I lose it all, I really don't give a shit.
So Dork J Fresh, favorite commodities for the mid to long term. Do you guys even watch the commodities market?
I'm not really a commodities person. I mean, if I was going to pick one, I would just probably get some exposure to oil because it's got to go up and it's not likely to go much farther down if we actually do refill strategic petroleum reserves, which I don't believe we're going to do. I think Biden is a coward.
Yeah.
Yeah,
If
I'd go long oil if I had to pick one. I kind of like copper, but it's not cheap enough. I feel like I missed the bottom on copper.
Yeah, I like oil too. I'm also a bit of a fan of nat gas, but that's a little more tentative. I was super bullish on it earlier, but it didn't play out the way I expected. And I think that just in terms of commodities in general, we're not going to see their popularity really rise until the interest rate environment starts to cool.
Well,
At that point,
I think right now a lot of people are just a lot of big folks are just super short commodities, right?
yeah,
Because they were expecting everything to crash. And so we still have to sort of wait for all that to squeeze out if it's going to squeeze out or to expire, right? So I feel like right now commodities is all basically just a bet on how much longer the shorts can hold on, if they'll make it or not. And I don't know, it seems risky.
Broader commodities, yeah. I think there's some commodities that have, like, obviously more targeted demand, and that's where I've focused most of my holdings, which is, like you said, energy, and I have some copper exposure, coal, anything needed to restart economies I'm interested in, but outside of that, not a lot. Not until we start to see government recession like intervention, right? And then that's when you can start getting into like steel and aluminum and shit like that, because government subsidization to get us out of an economic hole is where the profitability in that part of the cycle comes in. Gold might be interesting still, has been, but might be continued to be interesting, especially if there's any kind of significant collapse in dollar value. The same can be said for maybe Bitcoin at this point as well.
I don't like gold as a commodity. It's
I don't
more
I
of
don't like
a
owning it, but I'll
speculative asset.
play it, right? Like I'll play
Yeah,
boomers piling into it because they get scared.
it's just like a weird mixture of a commodity and a speculative asset, which I don't like.
Yeah.
Nobody's really, not a whole lot of people are speculating on copper, and that's much more useful on a grand scale than gold.
Oh, I'm long uranium too, but that's just because of the shortage in supply. Actually,
It's like if you're
copper
gonna
short in
play
supply
like
too.
doomerism, yeah, I honestly would just try your luck with Bitcoin.
yeah.
I don't like wheat right now. Yields still look strong. Like harvest yields still look strong. Maybe winter wheat later this year, but not yet. And that'll be because of like the flooding in Ukraine. But I think we're still a ways out from big food inflation. Unless there's some kind of like unpredictable political event with like the US and China or something, and supply chains need to divide. That can create problems, but that's going to create problems in all commodities, right? Like if that happens, you can just go long, broad commodities, and you'll make a shitload of money.
Yeah, I think oil is pretty much the one that has the most upside potential compared to all the rest of them in terms of like actual forward, like tailwinds on the price. I think there's more for oil than most other commodities.
Should I even acknowledge Watkins' question about buying GN 0 DTs at market open?
What GN 0 DTE? What is that?
Yeah, he wants to buy 0 DTE puts at Gamma Neutral at market open tomorrow.
Go for it. I don't know.
You know what? I want.
He says it's a fool's errand. Well, it's not necessarily. It's just the risk is already defined as like 100%. Right? If you make money on it, then the market moved favorably in the direction you wanted it to, very, very hard in one day, and you make a lot of money in that case. And if it doesn't, well, you lose the little bit of upfront cost. Don't be like that. But we are like that, and that we're like that, and then you asked anyway. So
yeah, I mean, you're gambling. Why wouldn't you just wait to establish like trend and range and see like where the volume is.
I'm not gonna say
It-
there's no benefit to like opening like 0.2 delta strangle at market open, right? But it's still pretty dumb. Like you would probably have better returns just establishing a level and then
Yeah, I
moving
mean,
into like a
here's
longer short
fundamentally. I don't know how this plays for zero DTs. It might be a little different, but I doubt it. I mean, typically, one of the greatest mysteries of the financial markets is if the market is rational. I know we all already know the market's not rational, but like given the the way that all of the derivatives can now be interconnected and evaluated based on the value of each other, why are puts so expensive? Puts are so expensive that to profit off of just holding a long put position over time, you would need the market to crash every like twice a year, something like that.
I mean, I feel like that's actually
And
always
so,
been true.
well, I mean, it's because market makers don't, they're really scared of that, left
Yeah.
tail event, right? I think that's probably the bulk of it, but why are people buying it? That's psychological. They're overpaying for it, but yeah, I mean, a rolling long put position will net lose you money. So doing that on zero DTEs over a long time, trying to catch like a big downside move, probably gonna lose you money.
You're
I
gonna
don't know.
barbecue your fucking portfolio if
So
you do that.
it's really just a gamble, right? I mean, you might get lucky, or you might not. It's like walking up to a slot machine. You might win on the first one, or you might win on the 10,000th one, or you might run out of money before you win it all. You don't know.
And it's even and like a slot machine too. Your odds are about
Yeah,
fairly
less than
similar,
50%. Yeah.
far less than 50% on that. Like you'd have better luck just not buying any freaking zero DTs until afternoon slowdown, and you can kind of see where the trend is going, what reversal points would be at, and actually like open a position that you thought about rather than just going, I'm just gonna open a strangle.
Yeah, I feel like end of day zero DTEs for like crazy moves like that are far better than beginning of day zero DTEs, because most of what happens in the beginning of day is that there's capitulation from the winning side overnight, and then the market just stagnates until 2 o'clock, right?
Yeah.
So it's like
Capitulation
so you're
and
just
zero
gonna
DT,
burn
new
up
zero
all
DT
the
selling.
theta
Yeah.
that you overpaid for in the morning. I mean, most
Yeah.
mornings I'm just selling spreads and then like closing them at noon when volume dies off.
Yeah, I mean, you
Yeah,
can bet
that's
on a
what most people
continuation or
do.
reversal. Like you're pretty much like, at least that way you can say, I think trend is going to continue or this trend is going to fail. Like you can at least say that with a strangle at open. You're just saying I'm exit liquidity for both sides.
Yeah.
Yeah, I don't like it.
Outside of like days where there's like big economic events, and then that's probably already priced into the vol. So
Yeah,
You won't be fast enough. Yeah.
yeah.
I mean, you might if you really, if you had like, if you knew where the market was going to be and you had a good range set up, you could enter an advantageous position near the IV bottom. But at that point you're overpaying for theta, and so like it'll balance out anyways.
Rolling the put credit spread through. Wait, what?
Rolling.
Is this like a continuation of something? What put credit spread? The put debit spread?
Oh, he's saying rolling put credit spread though. Yeah, like so.
Oh, okay, yeah.
I mean, yeah, I mean, that's kind of like what
That's
the
what the
market's been doing.
entire market is
Yeah.
doing, right?
Yeah.
So that'll work until it doesn't. And when it doesn't, it will fail spectacularly. So as long as you're ready to get out of the way of that falling knife, sure.
Yeah. Yeah, I mean,
It's
you're
the
riding the wave.
consensus trade right now.
Yeah. You can make like that. Momentum trading is it's good and dandy, but yeah, like Jay Fresh said, you gotta have something in the back of your mind. I mean, even if it's it's gonna work for quite a while, especially when there's as much momentum as there has been, but at some point if it reverses, you're part of the big crowd that's gonna rush to the door, so you kind of have to be having that in the back of your mind if you're gonna do it.
And as far as momentum,
I think with these zero DTEs being so prominent, liquidity being so good on them, like there's just so little reason, and it's one of the reasons you guys have been seeing me trade fewer and fewer just raw zero DTEs, right? Because there's like most of the time you can sell a debit spread and take on 40% less upfront risk for the same positional gain, if maybe even better, right? Like you can even get more theta if you start like I don't see a good reason right now with spreads the way they are to not do that, to not just use debit spreads instead of like taking a raw directional position hoping it plays out.
yeah, no, I agree. And you can usually, yeah, if you want to take the debit, I mean, you really don't have to go, that far to get a good value, right? I mean, the gamma is so compressed on the zero DTE that your spread doesn't have to be that large.
Nope.
And you can get a lot of money. And the reverse is true on the credit side, right? If you're trying to sell, you don't have to sell a spread that's that large for it to eventually have the same payout as a naked call, right? So it's basically just like the same reward for a naked call with capped risk. Kind of crazy, but that's that's an effect I think that people hadn't fully really thought through before this got crazy. Is that the gamma is so compressed that spreads are there's an interesting dynamic there that's sort of new.
I mean, I've been trying to highlight them more, but it's obviously a really steep learning curve. So I'm not pushing them super hard yet, but I'm trying to get people more on board with using spreads and comfortable with it, and realizing the advantage of automatically minimized risk on these positions that they plan on diamond handing to expiry anyway. So yeah, I mean, like if you're gonna bet that SPX is gonna go to 43.50, right? Why and that's where you think it'll bounce or turn around, or you're gonna cut your put. Why wouldn't you sell a 43.50 and then use that credit to buy whatever put you intend to buy in the range in between there?
Yeah.
Right. Like it literally makes no sense not to. Yeah, that's kind of where things are right now.
43.50 might be worthless, but that's kind of a large move. But I don't know what those look like early in the morning.
I mean, it depends on how many days you're selling. They get some value pretty quick. Yeah.
I was thinking about zero DTE.
I mean, think about it. Like you're gonna go. Like we've been doing this all year, right? And people are targeting like these moves that are like, we're trading at 4,400, and they're like, well, I just picked up 4,250 puts. and it's like, well, why? And they're like, well, I think it'll go to 4,250. And they're like, okay, then, you should probably sell like a 4,200, because why the fuck not?
And in general, the other thing, if you're buying theta, is it helps prevent theta decay, right? Because the short side is gaining value while the long side is losing,
which massively helps with averaging down too.
Yeah.
Offsetting theta decay is one of the best, like that's the best benefit of spreads by far, is just you can sort of lock in, at least to some degree, the value of your position, right?
Yeah.
I mean, you'll still, especially if you're close to the money, I mean, like the theta decay can start to skew, but if your spread is tight enough, then that's not much of an issue.
Yeah, it really helps people manage something that's normally very, very difficult, which is getting the appropriate amount of theta for your position, or adding theta to your position, right? Because a spread is much easier to roll, at a slight loss than just a put would be.
Yeah, well, rolling a put at 40% loss because you held it for an extra, 15 days or something.
Yeah.
It's rough rolling a put at a heavy loss versus, when you got a spread, you may once again have had some theta decay, but it's nowhere near as steep.
Where are the
All
boxes
right.
this week for SPX? I'll post them tonight. I haven't done them yet.
Yeah. Up,
All right.
up, down, or straight.
But I'll figure out all the levels for this week later tonight, and I'll get everything up for Pickles Picks later. Thank you guys for coming on. Dork, we have to meet again in a minute, but Jay Fresh, I hope you enjoy your trip. I guess I'll see you when you get back.
Well, I'll be around.
All right.
Have a good time, bud.
See you guys.
See you later, man.
Yep.
Thank you both for coming on. I'll see you guys after. All right. Anything else that I missed? Mountain Man, here's your Dillionaire song, dude. I couldn't play it with the volume turned up. I'd blow up everyone's ears.
Happy birthday, Gert. Yeah. Yeah, we might have a chance, but we ain't got rolls. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes Gert in the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon win. Praise be to RC and the VWAP, please, cause I need G and me to moon soon, man. Got the van GG on the CNBC saying that he ain't seeing no collusion. And we might be apes, but we ain't that Joe. Motherfucker trades this popcorn code. When the Citadel fails, I'ma buy my own boat. Sail the Elliott waves like a Kramer on coke. Yo, but we ain't no coke.
What do you think about Spirit Airlines? Supposedly they're getting bought out. Okay, that rumor's been in the mill for like a year now. Sure, they might not. I mean, there's people that have been holding Spirit Airlines stocks since last year, hoping for a buyout, and it's yet to materialize. I think JetBlue tried to buy them out at one point. I don't know if they're still trying, but those kind of positions could take a really long time to play out. So up to you. I mean, if you think you can get a good value on their shares, then maybe it's worthwhile. Otherwise, I would say probably not worth the wait. Where are the boxes this week for SPX? I'll do that tonight. QQQ doesn't move as much. It moves more. Than, well, at least than SPY. Would you recommend 20 DTE QQQ straddles in order to build up a port? You could try it. I mean, like overnight straddles, I assume you mean. I don't know why you need so much theta on them, because that makes the returns slightly worse. The more theta you get, the more it has to move for you to get the equivalent return. So there's like a sweet spot there for overnight straddles, but it's usually between like 5 to 14 DTE, and 14's kind of pushing it. You really need bigger moves for that. Which, you know, luckily we've had recently, but that's not going to always be true. Can you include NVIDIA because in Pickles BCS and Pickles picks this week? Yeah, I don't include them because they're difficult to manage and they can be risky. Like, look at NVIDIA on Friday if you want evidence of that, right? Like, it moved from like 420 to 430 and then back to 425. Like, the range of its moves can be really wide and they have to be actively managed. They're really good. They're really good profitability wise, but I'll throw a couple up, but yeah, they are very risky. So, I mean, if you're not super experienced with managing spreads, you may not want to take any big spread positions on it, especially on the bear call side. We'll use CC and CSP so far. Those are the easy version. I've heard you say Fidelity isn't good for other things. Spreads. Yeah, I probably wouldn't use Fidelity for margin. It's just difficult to navigate. It's not that it's bad for it. It's just that, like, they're not, it's not really like an active trading platform. Even ironically, Active Trader Pro is it's difficult to actively trade on. Some people do it successfully, all the power to them, but there are definitely brokerages that are easier to trade those shorter dated, more volatile positions on. And then also Fidelity is just kind of a bitch with everything. because they're a big boomer broker, and so they're not very forgiving with margin. They're not forgiving with PDT or you know, well, PDT mostly. But yeah, they just kind of suck all around as a trading brokerage. So yeah, I'd probably consider, if I wanted to actively trade something like spreads, I would probably consider using a different brokerage. I just like the video because someone has to be contrarian. Thanks, David P. All right, guys. IBKR is a good one to learn. It's got quite a learning curve, but if you're willing to put in the time, then yeah. There's easier ones. I mean, like WeBull's a lot easier to use than IBKR. And both of those are going to be pretty forgiving on the amount of money you have to have and to get like level 3 and 4 options. Okay. All right. Well, thank you guys so much for tuning in. I'll get Pickles picks up tonight. And then I will see you all tomorrow morning. Thank you all so much. Have a good one, everybody. Later.